Hello, this is Will Allen with Sentara Capital. Today we're going to address two topics that have been in the headlines of late. We're going to look at the recent move higher in interest rates, and we're also going to look at recent developments in Bitcoin. Let's dive in. Recently, market action has really been driven by moves in interest rates. Coming into 2021, the 10-year Treasury bond here in the U.S. Was yielding 0.9%. As of today, rates are just under 1.5%. That's a half a percentage move in just 2 months. What is been driving and why this has gotten a lot of attention here in the last couple weeks is the rate of change has significantly increased. So rates have really shot higher in the last few weeks, and investors are a little bit concerned and don't know when this is going to kind of end. So for example, if rates stay around 1.5%, for a little while here, that's no problem. We knew rates were going to go higher because economic growth is really going to pick up as we move through 2021, and so rates are going to go higher to kind of reflect that. But there's concern that if rates continue to move up at this kind of a pace and get closer to, say, 2%, that's going to eventually become a little bit of a headwind for the economic recovery and for investors. Now, if we take a look at the chart of the last year, taking a look at this yield, what you'll notice is that rates pretty much stayed within a range of about 0.5% and 1%. And then you can see this spike higher here in the last few months. Now, I'm also going to put up a chart of the last 10 years looking at the rate. And you can see in the context of this that rates are still really, really low. So still should be very stimulative to what's going to take place in this economic recovery. But again, markets tend to struggle with the rate of change with moves like these and not so much the change itself. Now, shifting gears a little bit, but also tied in to some degree here, look at the increase in money supply. And this is something we talked about in the fall. And that is that the growth in money is 26% year over year. And that's due to the extraordinary actions of the Federal Reserve with their bond buying program, as well as spending from Congress last year. And no doubt this number was going to be high because we had the shutdown of the economy. But over the last 10 years, money supply growth on average has been 5.8%. So at 26%, that's 5 times that average. So, the markets don't know, and what the Fed's going to have to the line they're going to have to walk here is going to be how soon do they pull back the punch bowl if they're starting to get concerned about inflationary impact of all of this. Currently, Jerome Powell says he is not worried about inflation. He thinks, yes, there's going to be a little bit of an increase in the next few months, but he doesn't think it's going to last. But we don't know. And again, this is going to be kind of trial and error for the Fed. But as we go on, the other thing with this money supply that you need to be aware of, take a look at this chart of personal savings here in the U.S. You can see a huge spike. Basically, you have a lot of households that have socked away a lot of money, either from the stimuluses that have taken place, but also, a lot of people have not been able to do vacations or go to concerts or go out to eat as much. And so the balance in their checking accounts have really swelled. And you're talking now over $3 trillion in personal savings here in the U.S. That's a lot of firepower, and that is going to come into play as we move through 2021 and people are able to get out We're already seeing a big decline in coronavirus cases due to the vaccines and other measures that have been taken. We've gone from over 300,000 new cases a day to 45,000 cases a day. If this continues to decline, you're going to have more and more people getting out there spending money. And so you're going to see prices go up on things like hotels and plane tickets as you see a rush of demand late spring and early summer. So again, the move higher in interest rates, taking a look at the 10-year, this is something that is the most important factor right now to the markets, and we're going to keep a close eye on it. Next, we're going to cover a topic that everyone seems to have an opinion on, and that is Bitcoin. Yesterday, Citi came out with a report, and I'm going to put the quote up here for you. In it, they said, Bitcoin is at a tipping point and could one day become the currency of choice for international trade, as companies like Tesla and PayPal warm to it and central banks explore issuing their own digital currencies. But here's the key part. It says Bitcoin's future is still uncertain, but developments in the near term are likely to prove decisive as the currency balances at the tipping point of mainstream acceptance or a speculative implosion. That's a pretty big difference in outcomes. Would you say either wide acceptance and the price goes higher, or a speculative implosion and the price plummets? And that's the bottom line, is that no one knows in the longer term what's going to happen with Bitcoin. There's no doubt that of late there have been more and more financial institutions, hedge fund managers start to come on board and believe that a part of the portfolio could be or should be in Bitcoin. And some say 1% of the portfolio. There's others that say 3 to 5%. But currently there's a couple issues here. Number one, Bitcoin pretty much cannot be bought in retirement accounts like IRAs on all the major platforms, custodians. Outside of IRAs, you can buy Bitcoin on certain platforms like Coinbase or CoinShares, and you can buy a full Bitcoin or you can buy part, and it is taxed like property currently. That's how the IRS views it. There's also in the investment markets, there are no ETFs that track the price of it. There is a trust from Grayscale that basically owns Bitcoin, and it pretty much goes up and down with Bitcoin, but because it's not tracking the exact price, it can trade much higher than what the value of its Bitcoin is when a lot of investors are piling into it. And it can also trade at a discount if investors are fleeing the asset class during market sell-offs. So there can be absolutely wild swings in the price of the fund, just like in Bitcoin itself. Now, looking at this chart, you can see the Bitcoin price over the last 3 to 4 years. It had a spike late in 2017, and then from its peak in January 2018, it fell 80%, and then went sideways for a while. And then of late, it's broken out. Now, you can notice looking at this chart, which shows the percentage off the high that Bitcoin is over the last few years. And I would just point out that Bitcoin has had 7 or 8 times declines of 25% or more in short periods. So that has been followed by spectacular moves higher in the price. So the bottom line is that it is a very speculative investment right now. It is not a currency the way that we think about it yet, and it's not been adapted in that regard. In fact, transactions per day of Bitcoin are basically at the same place now that they were in 2016. So it really is a speculative investment currently. But it's, again, one that's in the news all the time. Elon Musk talks about it a lot. He recently said he's taking $1.5 billion of the cash on Tesla's balance sheet out of around $19 billion that they have, and they're buying Bitcoin with it. Some other companies are assuredly going to do something similar. So it's a topic that's not going away, and we'll continue to keep an eye on it as it relates to the markets. So far in 2021, markets are up slightly, but they've done so with quite a bit of volatility, and this isn't a surprise. Coming into the year, we said, hey, look, there were a lot of reasons to be optimistic about markets, specifically consumers sitting on so much cash and really wanting to get out and do more as we go along throughout the year. That's a powerful force. But on the other side, the concerns that we had, when's the Fed going to begin to pull in the punch bowl? What's going to happen with interest rates? What's going to happen with tax policy as we go throughout the year? Those things are going to be around, and so markets are going to have many sell-offs like we've seen in the last 4 or 5 weeks. We've seen a couple 5, 6, 7% declines. Followed by rebounds. And, this is not new. Last year, in the second half of the year, in September, markets fell by 12%. In October, they declined by 9.5%. But yet, by the end of the year, they had recovered and were at new all-time highs. So we're still hopeful this can be a good year, but there's going to be short bursts of volatility mixed in, and we have to view those as potential buying opportunities. And again, looking at interest rates, looking at what the Fed does, when the Fed does begin to pull in the punch bowl, that's going to be a pretty seminal moment and a very critical time for markets. So we'll continue to watch all of these developments for you. We hope you have a good day. Take care.